Hi, everyone, and welcome to AB Conversations, where we will help you CFP your way out of it. A podcast where you get into the minds of a couple certified financial planners on how we think and feel about everyday financial planning questions and what should really matter most to you. A healthier financial life starts now. Hey, Adam. Don't have to ask you how you're doing. I know how you're doing. It's been one heck of a week.
Doing great. I talked to a client earlier today. He asked the same question, and I said, he just asked, how are things going? I said, as long as you don't turn on the news or check social media, everything is fine.
Yeah.
Business as usual. Everything is great.
So here's what's awesome about you sharing that. I need to admit to everyone here that I asked Adam last night to record a podcast with me and told him I wasn't going to give him the title. We're not doing any prep. We have no notes in front of us. This is raw as can be. And he trusts me enough to go through this journey with me. But without you knowing, you just gave a great segue into the theme here today. We've been in so many conversations with clients. Market volatility is hard. We work with some awesome people that after conversations or even during the conversations are just going, how are you guys doing? So let's peel back the curtain. Theme of the podcast here, Adam, putting you on the spot, is why Ben and Adam hate market volatility. We have lots of conversations in our offices that nobody hears. So I'm thinking the format of this, and let's just see where it goes. Why do Ben and Adam hate market volatility? Start your sentence with because, tell us why you hate it, and then let me give some context on why you hate something. And then I'll do the same for you.
Wow. Okay.
Why does Adam hate market volatility? Because ...
Ooh, okay. So without having any time to reflect,
I love it.
I'll say it took me a second, but I think the first real concrete thought that popped into my head, why I hate market volatility, is for our clients' sake, right? So we've been having a lot of conversations, and maybe this was kind of already on your prep side of things, but the disconnect between what people hear from the news, bond yields crater, and stock worst day in a decade, whatever the sensationalized headlines are, does not equate to the individual, at least for us, because we believe in diversification. We're not purely just invested in the S&P 500, does not equate to their investment experience. But unless people are checking that, which for us, yeah, exactly. We hope people are not checking daily. We hope they're checking it way less frequently than even maybe weekly. Maybe monthly or quarterly is the right cadence. But that's the difficult part. In bad times, we just don't necessarily want people to work themselves into a tizzy if they're really not experiencing what the headlines are portraying. But we also would want them, I think, to check to verify, hey, the markets are in a lot of volatility right now, but check your account just to verify your emotional side of things. Are they reacting or feeling a certain way? And does that align with how their portfolio is actually doing?
That's an easy answer for us, right? We hate market volatility because the news plays a role here. That was, of course, going to be one of the first things that I was probably going to share as I thought about it too. Right. And it is the sensationalized words. It's crash, it's crater, imploding, eroding, whatever. They're all popping up right now. But yeah, to your point, I'm gonna use mine now because I think for a lot of people, it always, for some reason, still feels like the first time. Like they haven't gone through this before, or that this time feels different. And I think you and I, we get into each other's offices and we're just talking through things. And to your point, we're just worried how they're going to react to it. Not that we're worried about their financial plans. Not that we're worried, hey, we're not doing the right things, or, clearly something's not working. We need to do something different. We're just worried about the role that the media and the information they're getting is playing with their emotions. And that's not, like, I guess I need to be very clear right now. This can feel very personal, right? People have opinions on what's right and what's wrong. And we are not here to pick a side on anything. You're
Hmm.
allowed to have these feelings. It's human to have these feelings. It can be sensationalized pretty quickly.
Yeah. And our one of our main roles in times like this is to hopefully help people avoid making costly emotional decisions
Yeah.
with their life savings, right? So that certainly feeds into that, where if they are thinking everything is in free fall and I need to get out of the way, I can't stomach this anymore, then, and if that is not truly aligned with how they are actually doing, then that makes it difficult. It just feels like they are feeling all of or a lot of that stress and anxiety when, to your point, in our minds, this is, I don't want to say this is normal, but we expect we expected volatility coming into this year. In any given good year, I know we can show the chart, right? The intra-year movement is, 14% to the downside in any average market year. So from that respect, this isn't wildly off the charts in terms of an abnormal market environment, considering the last two strong years that we've had in stocks.
Yeah. And go back even further. Like, as you're saying that, I'm trying to think. 2019, double digit returns. 2020, double digit returns. 2021, double digit returns. 2022, double to the downside.
Yep.
2023, double digit returns. 2024, double digit returns. I'm talking S&P,
Yeah.
what's on my board
Yep.
over, right? So,
Yeah.
like, we're so, I don't know, we're like conditioned in a way, like recent biases, things just go up. And then,
Yeah.
yeah, why do we hate volatility? Because it's hard. I don't know, what should we say there? It's hard to zoom out. We can't use the usual playbook of, hey, stick with diversification. We're higher than we were this time last year. By the way, that's true. But
Yeah.
it's hard for clients to zoom out, and it's hard for us to use that playbook when they got emotions just like we do, and it feels really hard to go through.
It's just so easy and natural for people to use the high watermark as the benchmark, right? Stock market hit an all-time high. The S&P 500 hit an all-time high on February 19th. So here we are a month and a half later having wildly different conversations. But for a lot of people comparing, well, here's what I'm down or here's the dollar amount that I lost, a lot of that is compared to not necessarily 12 months ago or even back at the beginning of January. It's that highest point back in February, which is not necessarily an unfair comparison, but some context and perspective, to your point, maybe zooming out a little bit longer makes a heck of a lot of sense.
Yeah, so as you're saying that, now I have another because.
Mm,
Why Ben and Adam hate market volatility? It's probably because it takes our clients' eyes off of kind of the whole point of all this, like what
yeah,
matters most to you and your
yeah,
ability to spend and live the life you want to live, right? I had a conversation with a client this morning. She's very near and dear to me. Like, I don't want you not thinking that you can go get that car in a couple weeks because you promised your grandson yours. And I don't want you thinking you can't take the grandkids to Italy next year because you do that like every other year. Like, that's the whole point of building a diversified portfolio and keeping cash, is that when there's market volatility, I don't want you to take the eyes off the prize that is just leading a more fulfilled life. That's why we built the plan. And market
that's it.
volatility, eh, I mean, that gets in people's heads like the losses are the losses, but it's really not about the losses. They're scared they can't do the things that they want to do.
And I would say for the majority of clients that we work with, they have good habits, right? The good habits that got them to retirement, to get them to hopefully a comfortable spot in retirement, is making those tough decisions, right? Being disciplined with
Yeah.
their saving, living within their means. So getting to retirement and feeling, and we've talked about this on a recent podcast, right? Flipping that switch from a saver to now a spender when you get to retirement is
Yeah.
very difficult for people to do.
It's already hard. Yeah.
Yeah. So then you tack on top of that the feeling of now the markets are down. I assume I'm down just as much, if not more so. Like I'm suffering all of this pain in my investment. So you know what? I can control the markets, but I can control what I spend and what I take from said investments. And
Yeah.
that level of control for a lot of people, it just that scratches the itch. When everything feels chaotic and so many things out of your control, just being able to
Yeah.
grab onto one thing and say, but I can do this. That gives some level of comfort and peace of mind that, in the storm, I'm in control of this one little piece. So I'm gonna hang on to that, which, yeah, in our minds, if we did the proper work and people were truthful with us up front on here's what I expect to spend and here's what I expect to need, then yeah, this should not affect their day to
Correct.
day
Correct.
living. We would hope that it does not.
But yeah, we hate market volatility because if we already struggle to get people to spend because they had good savings habits,
Yeah,
these times do not help.
yeah, yeah.
You got another one?
Not off the top of my head. Do you have
Okay.
another one?
I do. Again, I guess it's
Okay.
unfair. I put this on you to
No,
like
that's
get off
great.
your toes. Um, but it's actually because of something you said to me earlier today. I hate market volatility for us as well. Ben and Adam hate market volatility because patience is hard. Like you just said it. We have clients that you feel like you need to control something, and a lot of my conversations with people that are really like tuned into this are going, well, what are we going to do? What do you think we need to do? And to say we're going to do nothing is not a great feeling. Like, I don't feel good when I say that. I mean, it
Yeah,
is our way of saying, hey, we feel like we were prepared for this and here's what we're watching. But it's because patience to like actually allow things to digest, to actually be able to assess, like, do we need to do something different? We never want to be the people that got caught selling on Tuesday and didn't participate in Wednesday or
yeah,
participated in Wednesday and then they felt Thursday. Like, you don't need to know exactly what's going on in the market to catch my drift there. Like things are
yeah,
moving quickly. We need to just be patient, but that's really hard when people feel like they need to control something.
yeah. And I know we talked about this in a different conversation too. It's only been a week and a half since the initial tariff announcement, Trump holding the board with all the different reciprocal tariff amounts. And then that's really what kind of sent everything into a free fall. But leading up to that, the market was down roughly 10% from its peak, over the prior month
Yeah.
and, whatever, 5, 6 weeks. And so we were fielding some of those concerns just from that initial kind of downdraft. And then when everything kind of felt like it hit the fan next week or last week, everything just kind of got fanned. The flames being fanned. And now, if people were already anxious, it's now ratcheted to a whole nother
Yeah.
level. It feels like we've been in this, even though the worst of it has only, for us, it's only, as we're recording this, has been a week and a half. It feels like it's been months. Just the
Yeah.
bombardment of headlines and feeling like it's been relentless now. And it really has been months, right? Since the new administration took over in the end of January, headlines, multiple headlines per day for the
Yeah.
last several months. And it's a lot for people to digest. And we talked about this as well. People could just turn off the news, right?
Mm.
And unplug themselves from it. And that's incredibly hard to do. But I think for the majority of retiree clients that we work with, the news is kind of on, right? Either it's on their phone or it's on the TV in the background. And if they are not
Right. It's
extremely busy in
hard to
retirement,
disconnect.
it's much harder to kind of tune it out when maybe you have too much time to tune in.
Well, so now that I'm kind of getting into the theme of this myself, like, so that triggers another one to me that we were talking about just last Friday when we were kind of in the mode of now we have to reach out. It's because, all right, I got to go back to title. Why do Ben and Adam hate market volatility? Because your silence worries us. Like we know you're
Yeah,
into it. We know you're tuned in. And then you're not asking questions or reaching out to us. And now that's your job, right? Our job is to be proactive with communications. And I hope everybody feels that from us. But
mhm,
the fact that we got no messages last Thursday and there was like nothing in my inbox on Friday morning, we're like, crap. Now we have to like we don't want our communication to make it seem like we're alarmed. Like, "Oh, we're
yeah,
reaching out to you because things are crazy." No, but we do need to be here for you to kind of, I hope, be that filter between the news and, again, your financial plan, what we have going on, re-anchor
yeah.
on your plan, all that stuff.
Yeah, so we're really peeling back the curtain for clients listening to this, in that we often have the internal debate of should we send something
Yeah.
out, and to what degree are we, for people that aren't concerned and aren't paying attention, are we gonna cause them to panic or to stress them out, because if we're reaching out, they think, oh, well, if Ben and Adam are sending me something, then I should be worried. Like I
Yeah.
should be stressed out. And so we often have that conflict of, should we send something when we're not hearing from people? But we would rather hear from people, I'm fine, I'm good, thank you for checking in. But as we saw, again, peeling back the curtain, we sent some messages on Friday and we were overwhelmed with the responses, just giving people the opportunity to engage. And a lot of people took it.
Yeah. And, kudos to you, for helping come up with the plan that like we just needed to let people express themselves. Like the
Yeah.
outreach didn't need to be, here's what we're going to do about it. And, or here's all the historical charts on why you got to stay invested and nerdy financial planning stuff here or there. No, it just had to be, this is tough to watch. Like, how you feeling? Like,
Yeah.
let's just walk through it together.
Yeah.
But yeah, that's definitely this time, unlike other times for me, like I hated the market volatility because like silence just didn't feel good.
Yeah. And from our standpoint, right, and I think that is human nature with just a lack of information, you often assume the worst. So for us, yeah, if we're not hearing from people, then we often assume, well, they're not reaching out to us because they're in a panic. But we also, you said it earlier, right? We get to a lot of these conversations basically, and people are asking us, how are you holding up? How are you doing?
You see the bags
Um,
under my eyes?
but I think that that goes to the point where we work with such great people. We care about them. And obviously, to a certain degree, right, they care about us in return. And I think there are certain people that are more hesitant to reach out for help or just some level of support because they worry about us in that situation. Meaning, I'm sure there's other clients that they're helping, so I'll just leave them be. And
Yeah.
we don't want anybody to feel like they're in that situation where they can't reach out for any reason.
That is probably a perfect way to wrap this up, Adam. Like, kind of made this podcast about us, but clearly, you did the right thing and turned it right around and let it off with, this is about them. Like, we hate it because we're empathetic to what they need. Like, we care about our people, they care about
Yeah,
us. That's why partnership needs to exist. That's why we need to stay boutique, right? We're not a volume shop. We never will be, because at times like this, we need to be able to communicate with the people that need us to communicate with them. And we'll
yeah,
never be too busy and overwhelmed to not take that phone call or to not reach
but
out to you if we think we need to be proactive.
yep, yep. Well said.
I promise. Well, I shouldn't make a promise I can't keep. I don't intend to ever do something like this to you again and say, "Hey,
Oh, I'm game. I love it.
jump on the podcast with me and do zero prep. There's no filter." But I think some of our best conversations together are in my office, in your office. There's no microphone, but this is
Right.
how we talk ourselves through it. I think we make a great team. I appreciate all that you are. You keep me level when I'm a mess. So thanks for coming on and doing this. We hate market volatility. Everybody does. But this too shall pass, one way or another.
Well, thank you, sir. This
All
was
right,
great.
man. Chat with you soon.
All right.
Next time.
Bye.
Hey everyone, Adam and I really appreciate you tuning in. Please note that the opinions we voiced in this show are for general information only and are not intended to provide specific recommendations for any individual. To determine which strategies or investments may be most appropriate for you, consult with your attorney, your accountant, and financial advisor or tax advisor prior to making any decisions or investing. Thanks for listening.